Hey everybody, hey, hello and good morning. This is me, Darius Anucauskas from Markets.com, and today is Friday. And what a week have we been having? Look, it is spectacular. I mean, the markets are moving, the craziness is happening, and and we're not done because today we have the NFPs, and those are going to be carefully monitored by the Federal Reserve. So yes, stick around. We'll dig into all that. By the way, this is a quick video preview for the webinar, which is going to happen in a few moments. So yes, hopefully you'll enjoy the session, and I'll see you in a bit. All right, okay, hello and good morning, everybody. Hi, my name is Darius Anucauskas, and I'm the global market analyst here at Markets.com. And today's Friday, ladies and gentlemen. Yes, finally, the 4th of April. Well, that doesn't mean anything that it's the 4th of April, but it means that it's Friday. We're at the end of the week. We still have the full Friday to go through, so the full European session and the full US session. Look, before we jump into the markets, because those are crazy right now, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere, just going to put good morning in the chat room. Good morning, everyone. There we go. So, yep. Oh, morning there. Missed the letter. So, yeah, everybody, good morning. I hope you're all feeling nice and refreshed at the end of the week. Yeah, that was a little bit of sarcasm, sorry. But look, we're ready to hit the weekend and everything like that. But like I said, still have to go through a relatively busy day in my opinion. Also, before we jump into the charts and everything like that, let me just quickly mention our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, let's have a look at what's happening here with Nikkei 225. That's the first index that I always look at. So, yes, let's have a look here. And of course, everybody knows, everybody understands now, like that the tariffs did not really go well in the market yesterday, and we saw major declines. Honestly, I'll get to the U.S. indices in a bit, but I mean, wow. Look, yesterday we declined. So far, so good here, I would say. From the technical perspective, I talked about this, and I said to you in the beginning of this week, in the midweek, that look, I'm leaning towards the downside. On on Friday we were here and we stayed here, but I said, look, if we do drop again below the 35,970 zone, I'm leaning towards lower levels, initially aiming for that 35,111 tick. And then after that, well, I didn't have really like a level. I mean, I was kind of hoping maybe to see something like 34,000. I was aiming for these nice, beautiful numbers like 34,000, 33,000. And well, we reached one of those. And looking at the cash index here, by the way, I'm looking at the daily chart here of a cash index. We reached the area near the 33,255. So, question. I mean, are we going to go further south or no? Well, in general, at this market, it seems like, yes, there is a good chance that we could continue sliding further south. At the moment, it's really difficult to find good, strong grounds here. With Nikkei, the problem here is that, yes, Japan was hit also with the tariffs. We saw Japan getting the 24% on their exports. So look, I think the main worry is that the auto industry. So that's what I'm worried about more, because again, companies like Toyota, which they do have plants in North America, but not in the US, as I understand. So I mean, or let me double check. Toyota plant in US. So mainly it's gonna be yeah, mainly it's the areas in Japan and everything. So but in the US, yeah, that they still ship everything into the US. And let me just double check very quickly. In Kingdom, North America, okay, they do have a plan. They do have plants, but they're more of a, like an assembly plant or something like, yeah, yeah, okay. So they do have, yeah, okay. So basically, still, nevertheless, I mean, they are producing stuff in there, but again, I'm not saying that, there is not good value of those plants in there, but the cars which are produced in there in those plants. But no, but still, everybody understands that, the ones that are produced in Japan somehow have a little bit better quality, and people do know that across the industry and everything. So yeah, so look. At the moment, I think that yes, Japan is holding on, but I think that I think we're going to go into this world of exceptions and favoritism and all that stuff. Because look, I talked about this idea in my yesterday's video here in tariff exceptions, Fed Reserve rates, and NFP. You can watch this video here on our YouTube channel. I picked up on this topic, so yes, but briefly mentioning that like I said, we're going to go into this world where everybody's going to be applying for these exceptions and everything like that. The overall market, yes, everybody will be suffering, but on both sides, actually. It's not really helping the US, because the US is a consumer, it's a consumer nation. I mean, it's a consumer country. It consumes a lot, and it needs cheaper goods. That's the whole point of creating these agreements. But now those agreements are kind of flew out the window, and now we're getting into a bit of a different reality, unless it all gets overturned, unless we see that, let's say, the majority of the big companies, listed companies, start getting these exceptions that, okay, for until the end of the year, we're not gonna, the tariff is not gonna apply to, and then the market could actually stabilize and go back to normal. But at this point, yes, everything is in unknown. I think that yes, we're seeing this nice correction back down. In a way, everybody's prepared for a shopping spree, and everybody's prepared to jump in. And yeah, I would say this way, that don't rush for now. Yes, it's looking attractive, but we need some sort of like stable grounds first, to see some stable grounds first, and then we could maybe do something about it. But at this point, there is a possibility for further declines. We could end up maybe traveling somewhere here to the lowest point of August of 2024, or in a way the lowest point of 2024, near the just slightly above that 30,000 mark, and then yeah, we could go from there. But of course, there are some other obstacles here. Okay, this one we already surpassed, but maybe somewhere around here. This is going to be the next target for me, the 32,687 territory, somewhere around here, or basically this whole area, I would say, around this territory. I mean, it's a very wide area, don't get me wrong, but still, I think that could be a good target. Look, for now, like I said, I strongly recommend not to do anything in a way, because again, you don't know, okay, is this the bottom, or actually are we gonna reverse now, or are we gonna continue sliding? So at this point, in general, if we stick to what is happening right now, then yes, I think that we could continue sliding. But again, like I said, we need to know. We're at the moment, we're living through this period where we're living day by day. We cannot really plan, even like, if you're on Monday, you cannot plan for Friday, because you don't know that maybe on Thursday there will be something that will come up, a new set of tariffs or whatever is going to be applied, and that's it. You know, your all your plans are going to be like down the drain. So that's what I'm saying. For now, let's go day by day. I think that's the safest option. And at the moment, what I see here is, yes, I can see here further declines, potential further declines, and let's see. For me to get a little bit more excited with the upside, maybe a push back above the 35,111 territory here would be required. I know if we do start seeing any move back up here, still I would class that as a temporary correction before another possible leg of selling, and then yeah, we'll go from there. This morning we did get some data from Japan, the household spending, and let me just double check. Let me refresh the calendar. So let me refresh the calendar, and where's the Friday? There we go. Household spending declined. The year-on-year figure declined, and yes, the month-on-month number did increase, but the year-on-year number dropped. And yep, okay, we're seeing here a still, I mean, yeah, the consumer is not happy, and that's understandable. So with current conditions, I think everybody's worried, and yeah, let's see how this is going to play out further. But again, I stick to my technical analysis here. I do prefer it this way, and let's see. Looking at China 50, let's have a look at this one. I mean, this one is holding on and still okay. So I would say that, you know, no harm there yet. China 50 seems to be how to say it, okay, and it seems like, you know, like business as usual in a way. Business as usual for China. I mean, they're probably, you know, kind of used to all these tariffs and everything, and like that has been happening since Trump was, you know, first elected. So for now, what can I say? The China 50 index remains. They're closed, by the way, today. So I mean, but it remains above the 100-day EMA, and in a way, from the technical perspective, it seems still somewhat positive. If we start dropping below the 100-day EMA, I'm going to lean towards the 200-day EMA. Let's jump into the main action here. US dollar are going to be later a little bit. Dow Jones Industrial Average, we saw a nice major decline here, and look, yesterday Dow closed with almost 4% loss, and that was like, wow. NASDAQ was the biggest loser, almost 6% loss. I'll get to that one. And the S&P was always somewhere in the middle, almost 5% loss. So 4, 5, 6, you know. And look, so far in general, from the technical perspective, this is working out nicely. I talked about this. I said to you that, look, we are we were in a bit of a squeeze here, and I said that if on Wednesday I was talking about this when I said, look, if we do break this upside line, I'm going to lean towards the downside. My next target is going to be the 40,657 tick. That's the lowest point of March, and if we clear the lowest point of March, my next target is the area, well, just maybe slightly below the psychological 40,000 zone here on the cash index, and that's near the lowest point of September of 2024. We're not far, and I think that this is where we could end up traveling to. So let's see how this is going to play out. Of course, I'm not really look. This idea is working out. So at this point, I wouldn't be chasing the market. Let's say, you know, the first breakout was here, you know, then the next breakout is like this one right there. So, okay, if you missed both of these two, I would say just wait right now, just kind of, you know, chill and keep an eye on the market and what's going to happen today. Because again, today we have the NFPs, and that is a big worry. Oh, sorry. Apologies for that. And that is a big worry today as well for the Fed, actually, because look, the NFP is expected to come out on the lower side here a little bit. So from the previous 151K to 135. If it comes out somehow even below that, oh, that's going to be really a big bummer, I would say, for the Fed, because look, the Fed was initially kind of, you know, saying that, oh, look, we're going to be doing only like, you know, 2 cuts by the end of this but yeah, by the end of this year. But look at how quickly everything is shifting. Now we're expecting 4 cuts. I mean, we were balancing between 2 and 3 cuts. Now we're actually this is what I was saying to you yesterday in my video. Here, and also my live session on Wednesday. Look, this is understandable. All this is okay. All this is kind of, you know, really nothing new in a way, because again, they need to support the economy somehow. And well, this is what we're currently getting. My main concern is like this May meeting, which is kind of expected to, you know, we were initially expecting to see no cuts at all. We were expecting to see just just a flat normal same rate staying, but now they're like, it's shifting very quickly. Now there's a chance for seeing a cut, because we know that the June one was the more interesting part, because in June we were expecting 1 cut before, and okay, the probabilities here is now, I mean, it's still the same, that we could see that rate cut in June, but the probability for having 2 cuts by June, or during June meeting, then this is where the interesting bit comes in. Like I said, everything started shifting because everybody understands we need to support the economy. Now, the Federal Reserve understands that as well. So the way it can do it is by interest rates, lowering interest rates. You lower interest rates, you boost kind of spending. But then the problem is inflation, and in general, I think that the Fed understands that, and maybe at this point they will be a little bit in the rush again, like last year, to cut rates, because if everybody understands that inflation is going to kick in at some point, and it's like inevitable in a way. So you're probably gonna enjoy hiking rates, because you will have to hike rates. You will enjoy hiking rates from lower levels, right? So I think that that's why there is a chance that we could see maybe some sort of a cut in May again, if the situation continues to deteriorate like it was like yesterday. So that's what I'm saying. So now, I mean, this is something that's running, you know, in my mind. I mean, it would be a spectacular move by the Fed in a way, but look, for now, I think that you know, we cannot really try to project you know, too much, or try to forecast too much up front. We still have to go through the whole April. We'll see what's going to happen there, and you know, that saying that everybody used to say, like, you know, sell in May, go away, right? But I don't think it's no longer the case, is that sell in May, go away. Maybe in the back days, in the past days, it was the case, but now it's like whatever. Look, for now, looking at the Dow Jones Industrial Average, I'm aiming for that 40,000 zone. I want to see what's going to happen with NFP today. If the NFP comes out lower again, that's going to be, you know, that's going to be quite interesting to see. That will show deterioration, and maybe even this could even grow. This column here could grow more, because the Fed will see, oh, you know, like, oh crap, like, you know, we have, you know, bad numbers and bad NFP numbers, and we need to support the economy. So this is what could happen, and this is where, like I said, this column could start pushing higher again. But let's not rush. Another thing that could be worrying is, let's say the actual number comes out the same as forecasted, but the previous number gets adjusted. The previous number gets adjusted to a lower side. So in a way, yes, you know, you hit somewhere the area of 135, but let's say the lower number gets adjusted to, I don't know, like 100,000, right? And that's still is, yes, the actual number is higher than the previous, but maybe this could give the stock market that kind of little moment of positivity that, oh, you know, not everything is that bad. But then I think it could be just like a short-term positivity moment, but eventually I think the market would realize that, oh wait, but it's bad, you know, like in general it's bad. So it got adjusted from 151 to, let's say, 100. It is bad. So that's what I'm saying. So it's still, everything is still pointing more towards the downside. There's the only person that could do, or the only entity that could do something about the stock market right now. And I understand that they're currently feeling very, very well because they're in full control, and that's the current U.S. administration. So they're the only ones who can right now stabilize the stock market. I don't think that the Fed could do anything at this point. Or let's say the NFP comes out on the higher side. Well, okay, that's good, but I think that if NFP comes out on the higher side, that's not really something that's gonna really help the stock market to rebound and push back up and wipe out all the losses. No, I think it would just help stop the indices from falling further, because let me just jump into a weekly chart here. You can see that we at one point this week we were at around here near the 42.5 zone, and then we look at this. We dropped almost like 5.5%, or at least 5% from that peak, from that high of this week. Yeah, so that's, like I said, that's really bad in a way. From the all-time highs when we were in the beginning of February, we are now dropping, we've dropped a lot. So we've dropped around 10%. Another 20% here move towards the 200-day EMA on the weekly chart. I think that could be an indication of recession. I think, again, look, we're at key area of support here. I'm talking about this 40,000 zone on the cash index. If we clear that area, I think this is where the market could start worrying. But looking at the Dow here and looking at the lows here, which we saw back in March of 2020. Look, this move here was already like a catastrophe in a way, but then we recovered, and we actually rallied quite significantly. So what I'm saying is, like, if I apply now from this low my beloved Fibonacci to this one, to this high, we're currently approaching that 23.6. If we don't draw it this way, we draw it from the lowest point of 2022, we managed to clear the 23.6 here on the Fibonacci retracement, and now we're, like I said, this 40,000 zone is the midpoint between the 23.6 and the 38.2. So in a way, a nice good retracement of 50% could be just like, that beautiful moment here, what the market has been waiting, and we could hit the 200-day EMA. When I'm saying that beautiful moment, I mean, look, everybody was saying that the stock market is overpriced, stock market is overpriced, overvalued, like, why do you buy stocks when they're like so high up, and now the same people are like, oh my god, like the stock market is collapsing. But that's what you wanted, right? In a way, like that's what's needed. That's what's needed for the big boys who have like a lot of money, and who want to buy cheap. So that's going to be the opportunity right now. And again, I think that there could be some more blood to come here, but once this kind of stabilizes, I think the stock market could become quite interesting again for many investors, and that's why we're seeing shifts out of gold right now. But I'll jump into gold in a bit. The S&P 500, similar story, looking good here and traveling nicely to the downside. As you can see, we cleared the 23.6 here on the Fibonacci retracement. So in a way, in general, to be honest, my next target is the 38.2, and that's roughly around the 5,130 zone, somewhere around there. The NASDAQ, let's have a look at this bloodbath. Beautiful technical setup. This worked out like a charm. Look at this. I talked about this and on Wednesday. I said, look, keep your eyes on this downside line. This could provide good resistance. If it provides good resistance, we could see another decline, a drop back to the 19,100 zone. If that gets cleared, amazing. Next target is the 18,300. Boom. That's the lowest point of September of 2024. We're currently resting on that one. So now, if you're looking for some further action to the downside, a drop below this hurdle is required. Then we will target the 17,640 17,240-ish area here, or maybe even the 17,232. So with for NASDAQ, looking at this picture here, so I'm gonna pick up on the lows of October of 2022 here, the same as on the Dow, and let's see how much we have retraced back down here. So yeah, we did the 23.6. We're now on track to aiming for that 38.2, which is, by the way, as you can see, perfectly coinciding nicely with this area which I just mentioned. So good potential target. Let's see if we can reach that one. Russell 2000, that's also a catastrophe here, I think, from the highest point of this year so far. I mean, sorry, not this year. No, this is not this year. It started declining already back in November. Probably didn't like the current administration or something like that. So, but what I was saying recently, so let me just grab this, honestly. This is, so what I was saying recently that, look, where's that January? Where's that? Yeah, there we go. Somewhere around here, January. This is where we started off. Oh boy, there we go. So yeah, this is where we started off in January. So we now, so far, we have dropped around 15% already. I'm not mentioning the, the move down from the peak here, from the all-time high, which is back here, back in 2000, back at around 2,500 almost. And yeah, we dropped on this one around 23%. So again, look, this is indicating a bad moment. However, in a way, this is kind of okay for the Russell, right? I mean, it does make moves like that. But in terms of where the next target could be, I think this is a very good area of support, in my opinion. Let me just zoom in here a little bit. Oh, there we go. This 1,640, I'm not going to be surprised if we're going to end up traveling there. Honestly, this is looking quite radical in general, because we cleared some key areas of support, yep, I think that, yeah, now we're drifting lower, and this 1,640 zone could be a good option. But then what we're gonna have then, we might have the double top pattern here. So with a possible neckline being this one, and this is what I'm talking about. So this kind of thicker area here could be that neckline, and if that gets cleared, I mean, wow, that would be a spectacular formation here on Russell 2000. So keep that in mind, because again, look at this possible double top, and maybe we could see some action to the downside at some point. So yep, for now, looking at this picture, I am leaning a little bit more still to the downside. Of course, from the short-term perspective, we could see maybe a little bit of a hold up at some point somewhere here. But again, this is, we already surpassed that. No, that's not. No, I think this area here could become a little temporary, maybe haven. So 1,830 zone, somewhere around here, could be that little good option for a little rebound. The dollar index looking good here for the bears, right? Look, in general, leaning still towards the downside. I like this idea of dropping back below the 100 zone, and I think that it's quite doable, unless we see the 100 zone acting as a very, very strong area of support. So for now, I mean, look, this here, I'm just trying to find some sort of like logic here, but this 100.68 maybe could be a little pause here, moment for the dollar index. But in general, like I said, I'm aiming for that psychological 100 zone. Looking at the bigger picture here, you can see that we are, like I said, we have been moving kind of somewhat sideways in a way, with a little tilt maybe to the upside. But look, the dollar right now is not gonna have a very nice moment, in my opinion, because again, if the Federal Reserve is gonna continue with cutting rates, Yeah, that's not a very good moment here for the US dollar. So let's keep an eye on that one. For now, I'm not really very bullish on this one. On the contrary, I'm a little bit on the bearish side. The German index DAX looking good here as well, looking good to the downside. And look at this. Okay, look, unlike the US indices, the European indices, yes, they are also falling, but a little bit less than Chinese index is doing the best in a way, in my opinion. But what I want to say here is that at the moment, I'm still leaning towards the downside on this one. I said to you, and I talked about this on Monday and Tuesday, that my next target is somewhere around this upside line, taken from the lowest point of August of 2024. We cleared this upside line. I said to you that if we do stay above this upside line, above that 50-day EMA here shown as the green line, then yes, I will consider a move. I will consider a move to the upside again. But looking at this picture here, you can see that wow. I mean, we cleared the steeper upside line. It opened the door towards that 100-day EMA. Everything's fine. Everything is logical. And now the next target is this this upside line. This one taken from the lowest point of August. In general, again, I'm doing the same thing. I'm watching today the NFP to see what's going to happen there. And if we do see a further decline in the U.S. indices, then well, those could drag the European ones as well. The FTSE 100. Again, similar story. Everything is the same across the board. Maybe, just maybe, we could be seeing. Let me just adjust my microphone here a little bit. Maybe, just maybe, let me just, apologies, ladies and gentlemen, just want to adjust my microphone here. There we go. Oh, falling. Yes, there we go. I hope you can hear me and see me well in general. Yeah. Right. Yes, right. Okay, maybe this way. There we go. Okay, finally managed to do that. So, ladies and gentlemen, so like I said, yes, it's the situation here looks like maybe we're in a, from a technical perspective, maybe we're in a falling channel pattern. So if that's the case, then look at this, how much more we have room to go. In general, the target was reached. I was aiming for the 200-day EMA, yep, I've got that. Amazing. What's next? Next, like I said, next is this. Next could be this. Next could be the lower side of the falling channel. Let's see if we can reach that one. For now, I'm just going to stick to that, and I'm going to go from there. Let's jump into the Forex world. AUDUSD. So look at this. I mean, okay, although the US dollar is dropping, this one is falling off the cliff as well, because again, Australian dollar is a risk currency, and yes, at the moment everybody's out of risk. At the moment is the risk-off environment, and this is what we're seeing right now. However, on the positive note, we're still stuck in this little formation, this little kind of veg pattern in a way. Yes, we're currently flirting with the lower side of it, but let's see if we can rebound from it. If we cannot, and we, let's say, do drop and stay below the lowest point of this week, near the 0.6218, then yes, I'm going to go a little bit lower here, and I'm going to aim for these lower levels. But this, like I said, let's not rush into things. Let's see what's going to happen here first. AUDJPY, certainly, of course. I mean, I wasn't expecting anything else from this one, because again, it's a risk on, risk off monitor. Everybody's jumping into safe havens. I did a little piece here on TradingView. You can check out on safe havens yesterday, because again, everybody was jumping into those. And yes, this one, a little bit of reference to Arnold Schwarzenegger. So well, probably the people of my generation will know, or my generation and older will know. So yeah, what can I say? I mean, this move here is great according to all the technical rules and everything. We broke below the 91.85 zone. That's great. The next target for me is the psychological 90 zone, and then we'll go from there. NZD USD, similar story as with the AUDUSD, but still above this upside line. So there is still a chance for a rebound back up. However, my preference for the upside is from the 0.5830 zone. Very quickly on USDJPY situation here. Again, everything's logical. We've dropped below this area. I talked about this 147.20. I've warned you about this, and there we go. We cleared it. We cleared this area, and well, the next target in a way here is the area here near the 142 zone, and then we'll go from there. I know it's a lot, but hey, it seems like everybody's jumping into safe havens, and I think that this is where Japanese yen and Swiss franc are coming in nicely on that one. So USD CAD, look, despite a huge drop in oil, still the Canadian dollar picked up interest, and we saw a nice move to the nice move to the downside here on this pair. And look, what can I say? For now, it's resting nicely on that 200-day EMA. But if you're looking for some lower levels, a drop below this area is required. I talked about this pair this week on Wednesday. I said to you that if we do clear the 1.4245 and the 100-day EMA, my next target is the 200-day EMA period, and it worked nicely. So like I said, I'm going to apply the same logic here on the 200-day EMA. US dollar against the Swiss franc. I mean, look at this. Also, something that I mentioned to you in the beginning of this week as well. I said keep your eyes on it, and well, you know, there was a good reason for that. And look at this, boom to the downside. I mean, wow, like my target got reached here at the 0.8549 or 0.8550 territory. Look, I talked about this as well in this little video analysis, which is called "Go Get to the Safe Haven Choppa." And you need to do that in the proper, like, you know, Schwarzenegger kind of voice. So look, we tested that area here, and this was the inside swing high of the 12th of September of last year. So if we continue to clear this area, my next target is this one right there. Now, I'm not going to stick to one level. I'm going to keep an eye on the area. Basically, the 0.84 is the next target that I'm going to aim for. Let's have a look at what's happening with the euro. Of course, a major blow yesterday for the US dollar, and look at this, a major gain for Euro USD bulls here. I talked about this as well. I warned you about this breakout here. I said that my next target is going to be somewhere around this 1.1121 tick, and then we'll go from there. For the downside, I would like to see actually a drop back below the 1.0950 territory. And then I'll consider a move lower. EUROJPY is still holding on. This is quite interesting, actually. It seems like that the euro looks like a safe haven in a way, because Japanese yen right now is attracting a lot of attention, and the Swiss franc as well. And but you can see here we saw a decline in EUROJPY, but not a major one. So in this formation and this kind of setup here, still looks somewhat bullish. So I will say this one: as long as we stay above this downside line and we stay above this area, then yes, there is a chance for this one to move back up here and to move towards the 164.90 zone somewhere here, or maybe even higher. Let's see how this is going to play out. EURUSD, just wanted to show you this one. This is, yeah, the Australian dollar is not feeling the love, and there we go. We broke out this through here, and oh my god, like, I mean, this is like just spectacular and looking good here. And in a way, my next target on this one is going to be the highest point of April of 2020. And we're not far from that, actually. So look, we're going there, and this was a move triggered by the major sell-off in the stock market, where everybody was jumping out of the Australian dollar, and I think that this pattern for now could continue. My next target, like I said, is the 1.8120. I'm not saying that we're going to definitely go there, no, but at least, you know, when you're at this point, what I'm saying is like we could still, you know, push higher a little bit, stabilize here, and then move again, you know, to the upside. So let's see if that's going to play out. Very quickly on Euro CHF actually, because now the Swiss franc was on the stronger side yesterday and against the euro, and this is, like I said, this is where it's interesting, because if you also look at the Swiss franc JPY, you'll see that yes, the Swiss franc was the strongest one, despite the Japanese yen being also the safe haven. And this was, like I said, the battle of the safe havens, I call this pair. And yep, we pushed higher on CHF JPY, and looking at, like I said, Euro CHF, we can see clearly that we are drifting lower, but I would say still there is a chance for a rebound. Let's see if we can get a nice little rebound from here, from this upside line taken from the lowest point of November of 2024. I'm still, like I said, I'm still going to lean towards the downside on this pair, but again, let's see if this can happen here. I'm not going to drag this one way too much to the upside, because why? Because we have another like downside line right there, which basically we could end up coiling up on the Euro Swiss franc here. GBPUSD, very quickly, a beautiful pop, is the same as with the euro, but then you can see that, as we know, that, you know, the British economy is very tied up to the US economy, and it's not that, like, you know that is the British pound right now is benefiting that much, but it did benefit purely on the weakness of the US dollar. But looking at this technical picture here, I'm kind of still somewhat positive on this one, as long as we stay above the 1.3014 zone. If we somehow drop back down, back into the 1.2887 territory, then yes, great, I'm going to consider a move lower. GBPCAD, it is at an interesting spot here as well. So it is like I said, the Canadian dollar is picking up interest, but what's interesting is that it's not picking up interest for you know, for some sort of like that it's stronger or something like that. No, it's just purely like a game of, like, you know, whoever's weaker against it, it's winning, you know. So yeah, at the moment, I think that there could be some more downside on this one. Let's jump into the commodity world, ladies and gentlemen. Gold yesterday. Wow, what action we saw in gold. I mean, I hope you were all careful with this, because I mean, look at this. We traveled all the way to that 30,057 territory, which was the highest point of March. It was the all-time high up until the 27th of March. So we traveled back to that area, we tested it, we rebounded back up, and I'll just jump into one hour chart. Look at this, boom, what a reversal back up. So look, the daily chart right now, I am not really very how to say it, bullish on this one, nor bearish, because my bearishness will come on a break of this territory, on a break below the 3057. I know that there's a lot to miss out on, but I don't want to rush into things, because if by any chance this one starts pushing back above the 3114 zone, well, maybe we're not really giving up on the upside scenario. Maybe we'll go back to the all-time highs again. Let's see. I'm not, like I said, I'm not rushing into things yet, but could be quite an interesting play here. Silver sold off, of course. My target got reached. I was aiming for this upside line, and yep, we got the test of this upside line, and we broke it. We broke it, and now it's opening the door towards the 200-day EMA. In my opinion, I think there's a good chance of hitting that area. Let's see how and when we can do that. Let's jump into, oh, by the way, let's have a look at what's happening with platinum. Similar story. Copper, beautiful decline in copper. I mean, look at this. Look at this. I mean, and I think this could continue drifting lower. Wow. I mean, spectacular move. But another spectacular move is in oil. Did I say to you that I am bearish, or did I say to you that I'm bearish? I was honestly, I was telling you this on Monday, and we were seeing these pushes higher. I said, look, don't rush, because I still believe that there could be some downside on this one, because again, we have increased production. Um, we have increased the production of oil. We have, OPEC, a lot of members of OPEC Plus kind of sticking to increased production levels, and also a drop in global demand due to the issues with the economy. There we go. We have a beautiful cocktail for this one to go lower. And looking at this picture, in my opinion, we're very close right now. As we speak, we already are, I talked about this 65.25 territory, or in general, the $65 mark. I talked about this before, and look at this. Look at this. We are at a historic moment, and if we do drop and stay below this, I am leaning towards the downside. I'm leaning towards levels maybe to around here, somewhere around the $61, $62 mark, or maybe even going below that. So the $60 mark becomes the attractive target. So let's see if we can reach that one. Natural gas, very quickly. So again, a bit of a roller coaster ride here, but natural gas is still holding on very well. Let's see what's going to happen here. At the moment, there is a chance for this one. Overall, it's still bullish. It's still bullish, and we remain above all my EMAs. So hey, let's see if we can push back up. Coffee. Let's have a look at coffee. Coffee is still, well, this is, like I said, this is one of those moments where coffee still has demand, and because we increased the amount of coffee drinkers in the world, this commodity remains, it's still very, very attractive. And I think that it could end up, being that this one could be the safe haven eventually. But of course, I'm not rushing into things yet, because in general, this picture here right now doesn't really look very positive, because okay, look, if we are coiling up, and if we are in this little triangle pattern, maybe actually somewhere like this. Yes, I think this would be a little bit the better case here. So if we are in this little squeeze moment right now, look, it could pop either way, but my upside scenario is on a break above the 411 territory. I know it's missing out a lot of territory, but hey, I want to be on the safe side. The downside scenario, I'm a little bit more adventurous, I would say. If we do drop below the lower side of this little triangle pattern, we could drop below the 50-day EMA, and that's where it's opening the door towards my 100-day EMA, and then we'll go from there. So long story short, I'm really, like I said, interested in what's going to happen here. I'm really interested in what's going to happen with the this potential idea, like a move back to this upside line. That would be quite interesting. That's like almost moving, dropping like around $100 here. So again, could be an interesting one, but yeah, I think it's possible, because we're currently going through this moment of increased volatility, and where everybody's trying to drop the market, where the big boys could go and start shopping again. Let's have a look at sugar. Sugar is still holding on. Cotton, my beloved cotton, there we go. We dropped. Oh my god, I was kind of really leaning towards the upside on this one, but yes, it fell, because this one is driven by economic trade. Look, cotton, that means less t-shirts bought, and from abroad, and that's where the issue arises. So cotton dropped significantly. This one really, I think now at this point, if this whole tariff thing continues, then if some companies don't get exceptions or anything like that, or some countries don't get exceptions, then I think cotton could continue sliding lower. Initially, it was a good moment here, but yeah, we know what ruined the moment. And finally, let's have a look at what's happening in the crypto world, because I dropped a piece here on the crypto, on Bitcoin here on TradingView. You can check it out. And what I said to you yesterday in that little video, that look, the crypto world is still holding on. We're still above the 200-day EMA here on Bitcoin. And if you're looking for some lower levels, a drop below this 200-day EMA is needed. In general, I would like to see a move lower because, again, I would love to see a test of this upside line, which is taken from the low of the 13th of October. So if we start dropping below that 200-day EMA, I think that it's quite possible to end up traveling and retracing all the way back to this upside line. For the upside scenario, well, I would need to see a push back above the 89, or in general the 90,000 zone. Because if I can get that move, I can get a break back above all the EMAs, and more buyers could join in. So Bitcoin Cash, very quickly, let's have a look at this one. What's happening here? Okay, this one for some reason is off. Okay, this one, right. So Bitcoin for now, let's stick to that one. I think that yes, that's the only one. For some reason I have only this one is moving at the moment, so okay, we'll stick to that one. But hey, you got the picture, right? I mean, at the moment, if the US dollar continues to slide, then we could in a way see some positivity here in the crypto world. Or if people are going to be worried about jumping in into cryptos, at least the drop of the US dollar would not allow the cryptos here to depreciate too much, so that's in a way a good thing. So not falling is actually a good thing. So yes, we're not moving higher, but at least we're not falling. So that's what I'm saying. So yeah, that's the current situation could be a little bit more maybe beneficial for the crypto world. Let's see if that's going to be the case. So ladies and gentlemen, I'll have to wrap it up here. Thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments, everything. I really do. So let me know in the comments what you think. In general, do you agree or not with what I say? But hey, hopefully, like I said, hopefully you'll continue watching our show. And as always, stay safe, ladies and gentlemen, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. I shall see you on Monday. So have a nice, beautiful trading day, and be careful. Like I said, be very, very careful. If it's not ticking all your boxes, just don't jump in. Thank you very much, and bye-bye.